Good morning. Welcome to CurrencyTransfer.com's morning market brief for Monday the 29th of January. The main headlines are that on Friday the UK GDP growth figure came out at 0.5%. The euro holds most of its gains but enters a slight reactive phase, and there is continued confusion over US dollar policy. So in the UK, Friday's Q4 GDP figure gave sterling another nudge a little bit higher, and cable edged closer to the 143 level, peaking at 142.85. I think we'll put the exact details in the comments below. Before the end of the day, that had slipped back towards 141 following President Donald Trump's closing speech at Davos, where he continued to allude to dollar strength and indeed a strong dollar policy. The Q4 data in the UK closed the year-on-year figure at 1.5%. This was better than forecast, but it had come down ever so slightly from 1.7% in Q3 for the year-on-year reading. There are continued fears for a correction in the value of sterling at the moment, and indeed the market seems to be looking ahead for the catalyst. This may well be the kick-off to the next stage of the Brexit talks, which would be a beautiful irony given how the confidence surrounding these talks really helped kick on the sterling rally. There's a degree of concern that the capitulation at the end of stage one may continue and lead into these second wave talks, and may even lead to the UK remaining part of the EU in all but name, alongside perhaps like a Norway scenario. Some of course see this as a good outcome, but it could well, test the Conservative Party and may even lead to another general election. The talks around the transitionary period start very soon, and trade negotiations will kick on towards the end of March. Over the weekend, the press seemed to focus on the GDP and what that may mean for UK monetary policy. Some analysts have even brought forward their forecasts for the next hike. HSBC, for example, is calling for a next rate hike as early as May. Looking ahead, the week is fairly quiet for UK-based data, so there'll be plenty of time for Brexit rumour and speculation to move the sterling exchange rate. Looking at the dollar, despite President Trump alluding to a strong dollar and a strong dollar policy in his closing speech, the debate over formal US policy will of course continue. The dollar index remains relatively choppy, which is always a good indication of relative uncertainty. This week the FOMC meets on Thursday in New York. Very unlikely for there to be any change in interest rate policy over in the US, with this meeting being a lot more about the handover between Janet Yellen and Jerome Powell coming in as the new Fed chair. The highlight of the week will probably be non-farm Friday, where the non-farm payrolls are forecast to post a figure of more than 200,000. This indeed would be supported by Friday's GDP figures from the US, which showed the economy growing at about 2.4% in Q4. All of these elements should be considered and reviewed ahead of our office sweepstake, largely because I'm defending the title. Somehow I fluked it last month. Anyway, fingers crossed. Any hints and tips, please do comment to give me a leading edge. Over in the Eurozone, the Euro has moved towards a much more reactive stance on Friday, with the dollar taking centre stage. Euro dollar touched just shy of 125 before retracing back ahead of the weekend with a little bit of profit taking, which has also continued early today in the Asian session. Sterling euro also closed at a low, reflecting euro strength, and indeed with sterling looking or the sterling rally looking increasingly fragile at the moment, a lot of commentators are looking for an excuse, that catalyst to sell off sterling. So there are a lot of analysts at the moment suggesting that even a move down towards 112 against the euro shouldn't be discounted. So for those euro buyers, it may be worthwhile taking some of the exposure off the table before that happens. Of course, we'll keep you posted on any further developments throughout the day, but if you've got any questions, by all means tweet me at FXPlu and use the hashtag AskPlu. Have a great Monday, all the best, see you tomorrow.